A lot of familiar faces here. Let's want to say hi to all of you, and let's get this started.
Awesome. All right. Thanks, everyone. Great conversation. So we thought about, as we're looking at, and I know the rest of the team may have not seen the image I put this morning in front of the team here, but I look at the universe, right, as a Filecoin universe, right, as a nursery of stars, essentially, right? We're building the next gen MSPs, but also new applications, new projects are being born every single day, and HackFS is one of the big nurseries, I would say, right, that where we're building these new projects. So this conversation today, what we wanted to do is talk a little bit more about what it would take to move your projects forward and either raise funds or participate in one of our amazing accelerator programs. So we have four representatives of, one from Techstars, one from Tachyon, LongHash, and Outlier Ventures. All four are either running our accelerator programs or are starting to run a new accelerator program. So with me, we've got Gabriel. Gabriel, let's kick off the conversation. You're a very experienced Web3 accelerator, obviously. You're currently running a program. Now, compared to a year ago, what trends have you seen in, particularly in raising capital in the Web3 space, and what recommendations would you give to the new entrepreneurs in raising capital today?
Yeah, great question. So first, super excited to be here. I love coming to HackFS. I love coming to these events. It's always amazing to see all the incredible builders. I'm Gabriel, I'm the managing director of Tachyon. For those of you that don't know, Tachyon is a part of Consensus Mesh. We've collectively incubated and invested in north of 100 projects and companies within the ecosystem. Some of the key pillars of the Ethereum ecosystem, companies like Infura and MetaMask and Threebox and Pegasus and Truffle, so on and so forth. Tachyon is our accelerator, which is where the most ambitious, early stage Web3 founders come to join us for a 12-week sprint to really hone their value proposition, test their assumptions with real customers, and prepare for the next stage of investment and growth. And so I think, at this stage, I have mentored, advised north of 65, 70 Web3 founders and companies, many of which have gone on to successfully raise and or exit. And every time founders come through a cohort, I think the thing that hasn't changed is the good old-fashioned principles of how you go about building a company, how you go about building a startup, right? So companies are built to solve problems. And most startups never actually find a real or valuable problem to solve. So it doesn't matter if you're a Web2 startup or a Web3 startup, the fundamentals are the same, right? The fundamentals are, have you honed in on a really good problem? What is that problem? Who has that problem? What's the intensity of that problem? How often do they have that problem? Are you operating in a good market? Are you operating in a market that is large and or growing and moving fast? Have you figured out what your startup does in terms of being a differentiated solution in the market? Do you have an insight into the user or the customers that you have and the problems that they have? Investors are not investing in your vision quest, right? Investors are investing in companies that in teams that have the ability to hone in on really good, valuable problems and solve those problems for real users. Outside of that, I think, the other solid fundamentals would be, show, don't tell. Can you actually prove demand? Do you have the ability to build a real product? Are your early users or customers really interested in this? Can you prove traction? Can you prove demand? These are the fundamentals of building any startup, any company. I've been a 3-time founder, 2-time entrepreneur where I went in-house to build companies. Those things never change. In terms of the trends, I think, and maybe some of the nuances of building a Web3 startup, I think, two of the most unfair competitive moats in terms of like Web3 startups are community and composability. And a lot of the trends that we're seeing right now for Web3 companies that can really think about where they fit into the stack and then can actually build a strong community around their product. Those are the ones that we always see that break out. And in terms of some of the trends that we're starting to see, obviously we're like in NFT summer. But we're really interested in, we're starting to see more and more investors approach us about this idea of composability and convergence. So like, as we start to see NFTs converge with DeFi, or NFTs converge with DAOs and DAO tooling, or NFTs can converge with social gaming metaverse type of plays. I think those are really kind of like the interesting plays, you know, in terms of like what we're starting to see in investor activity. But the fundamentals are the fundamentals of like how you go about building a company. And I think my other esteemed panelists here, I think would 100% agree with me in terms of like what they see in terms of successful companies.
That's awesome. Yeah, I know some great ideas there. I mean, there's like, you know, NFTs, you mentioned NFT. I just want to jump in on that. I mean, it's definitely a hot season, but you know, my take is that eventually all data that we create, right, will eventually stored as sort of like in an NFT type of format. Do you agree with that, or do you see that the Web2 world is starting to see that?
I think we're always starting to see. I think we're always starting to see some of those primitives, and I'll tell you, like Gen 1 of NFTs. So I was building my startups back when social media platforms were the big thing. I've seen this meta trend already play out. Like I know how this plays out. Back when companies first started getting onto some of the social platforms, they tried to take their shitty print publication and slap it on the Facebook page and call it a day. They weren't actually hacking around the nuances of the actual platform. And I think we're seeing the same thing with NFTs, right? Like, don't get me wrong, I'm all about aping into the Bored Apes and the CryptoPunks, and I think it's fun and it's great, but I'm really interested to see like Gen 2, Gen 3 versions of NFTs, and how you start to hack around composability and use NFTs and their composability to continue the consumer journey and experience. And I think that's why we're starting to see like NFTs converge with other trends like DeFi, like you know, data DAOs and DAO tooling. So yeah, I couldn't agree with you more. And you're going to start to see new and interesting use cases of NFTs as they map to like extending the consumer journey.
Awesome. Love it. Moving on to Isaac. Techstars is recently new to the Filecoin ecosystem. You guys are starting a new acceleration program. What's your, you know, what is Techstars looking for when recruiting Web3 founders?
Yeah, well, Stefan, thanks for inviting me to join this awesome panel. So I am Isaac Kato. I'm the managing director of the new Filecoin Techstars accelerator. I'm a serial entrepreneur and a longtime early stage tech investor. So I've started 2 companies. I've run 3. I've raised a couple $100 million in equity and debt capital. And I've had a couple of good exits. I was also a VC for about a decade, most recently with General Catalyst Partners, and I'm a longtime angel investor. So I'm super excited to be spinning up the new Filecoin Techstars accelerator. It's quite a mouthful, but it'll run next year from March 21st through mid-June. And if you don't know, Techstars is the global network that helps entrepreneurs succeed. We have roughly 50 accelerators in the global network. Collectively, our founders have raised over $15 billion of capital. There are, I think, now 15 unicorns, and we have a collective market cap of about $52 billion. And you know, really notably on the point of trying to help founders find success, of the 2,700 companies that have gone through a Techstars accelerator, 86% of them are still in business or have exited. And our blockchain and crypto alums include folks like Chainalysis and TradingView and Arweave. And my own crypto journey starts in 2013 when I brought the first Bitcoin miners to Iceland. So I built the first large-scale data center in Iceland, and I stumbled across Bitcoin miners who were sort of a perfect customer for us to bring to Iceland, and they ultimately compose about 50% of our business. I think in like late 2014, we estimated that 5% of global mining capacity for Bitcoin was actually in our facility. So, wow. So that was a fun and wild ride. So to get to your question, what do we look for in terms of founders? So, I mean, we first and foremost, the first lens we ever look at a company or a prospective applicant is the founder. We care first and foremost about founder quality and their DNA. So Regardless of whether you're doing Web3 or something more traditional, we certainly want to see people with a big vision and a desire to make a very big positive impact on the world. We want to see brilliance and capability. Execution really matters. One thing that I look for specifically is founder market fit. So I want teams or solo founders who have really deep insight into the problem that they're trying to solve. They're not just sort of tourists trying something cool out, but they've thought about this problem for a while. Maybe they've experienced it themselves, and maybe they have an earned secret. Maybe they've figured something out that nobody else has figured out, and particularly how to apply Web3 infrastructures and methodologies to the problem they're trying to solve. I look for people who have evidence that they're rapid learners and iterators. I think the sole competitive advantage that most companies have at these very early stages is just how quickly you can move. And you've got to be, humble enough to learn and get feedback quickly and make quick changes and implement them. So that matters. And then specifically for Web3 founders, I'm gonna completely echo one of the themes that Gabriel mentioned, which is that we want people who understand not just the tech stacks and the Web3 and token infrastructures and mechanics that they're using, but how they apply to real world problems that they're trying to solve. Because at the end of the day, while I firmly believe that decentralized infrastructures should provide meaningfully better solutions to a lot of the problems out there, we're still ultimately trying to solve a customer's pain point or fulfill their desires if it's a consumer application. And it's just not enough to build cool shit. You got to build cool shit that other people care about. So we are, I'll say the exact same thing. We want people who understand how to take the Web3 world and make a fundamental difference to solving a problem or fulfilling a desire.
Cool. You got to create cool shit that other people care about. That's a tagline I'm going to start using. Awesome. Maybe let's move to Outlier Ventures. Blake, Outlier Ventures just closed their application round. This will be your first cohort. And you've been investing in open data economy for the last 7 years, right? What type of projects are you looking for, and where do you experience the most value, and where do you think new startups should be focusing on?
Great question, Stefan, and allow me to start by thanking for the opportunity to be here. I'm always honored and humbled to be in front of HackFS, and I truly believe there will be a lot of great projects coming out of it. I'm Blake Lezenski. I'm the program manager of the Filecoin Basecamp at Outlier Ventures. Quickly about our organization, we started in 2013 and it's one of the probably first European Web3 focused investors, probably still one of the biggest globally in terms of number of deals. Then around 2016-17, we started investing on a venture scale in seed and pre-seed deals. But around 2019, we understood that with the expertise and people we have on board, the optimal value we can deliver to founders and teams is actually through an acceleration program. And that's how Basecamp came to life. And as you mentioned, Stefan, this is the first time we're teaming up with an external organization, and I'm super glad it's Protocol Labs, to deliver a version of Basecamp that is dedicated to a specific technology stack. So in terms of projects we're looking for, I'm very keen to see projects that have a token in their future and are crypto heavy. I believe this is where we as Outlier Ventures can add maximum value. We accept solo founders and teams. My perfect sort of mindset to come to the program with would be to be great on the technicalities, but also appreciate the value of go-to-market. I would also like to see projects that see the value of Protocol Labs stack beyond just simple storage capacity and many other implications that come out from the technology. We would like to dedicate the program mostly to the middleware layer and the infrastructure. We think this is the key to the persistence of the metaverse and making it truly open, as well as introduce an optimal user experience to NFTs. As you mentioned, we have a lot of experience investing in the new data economy, maybe to some extent longer than anybody else. And we have a full supply chain from data to compute in our portfolio. Ocean protocol that allows users to create a decentralized marketplace for data. Secret network, which is the first blockchain with data privacy by default. Fetch AI, an open access tokenized decentralized machine learning network, as well as Kudos, decentralized compute network, and enabling blockchain scalability. So where can we add the most value? We are extremely commercially minded, hence my point about amazing technical minds coming to us. We always put emphasis on fundraising and tokenomics. In the last 12 months of Basecamp, we helped raise 130 million of seed capital for our projects. Since 2019, the combined value of the Basecamp portfolio is $1 billion. At the peak of the bull run, it was closer to $3 billion. And we have several billion-dollar networks, including Boson Protocol and Dia Data. We also work with a network of 1,500 co-investors, from world-leading investors in West and East, from tier one VCs all the way down to community pools. So we truly can help you find capital anywhere. So we look for technical teams that want to create a scalable business and attract capital, that understand there is a gap between creating a great MVP to hit the market and actually bringing it to that market and commercializing it successfully. And this is where we can help, also including hiring of commercial people and custom go-to-market strategies. We rely on our huge network of partners, including large enterprise organizations. And finally, we have a very complementary alumni stack around data economy, data marketplaces, compute, and multi-party computation.
Cool. And you're that's great, by the way. You're calling in from UK or somewhere in Europe, right?
So I'm currently calling in from Ibiza, just to get some sun before the program starts on 6th of September.
The place I want to be at right now. Yeah, that'd be cool.
Poor guy.
Yeah, poor guy. Because one thing I wanted to call out is that, we have 4 great partners here on the table, but all of them are calling in from different areas, right? We have representation in Europe, Asia, and the US. And that brings me to the next partner, Stefano. Maybe you can tell us, where are you based today?
I'm also based in an island, but I'm in Singapore.
Oh, there you go.
Pretty much on the other side of the world.
Yeah. So welcome. So you LongHash, you're from LongHash Ventures. You closed your recent application window as well. Very familiar with the Web3 world. How are investors differentiating themselves, particularly in a bull market condition?
Yeah. Well, first of all, also super excited to be here today. Thanks a lot for having me. Very glad to be able to speak to everyone. So I'm Stefano Bury. I'm the program lead at LongHash Ventures, and I'll just give a quick intro to our organization. So we're a Web3 investment fund, and we're also Asia's leading Web3 accelerator program. For those of you who haven't heard of us before, don't know us, so we've accelerated over 40 projects for the last about 3.5 years. And we've helped them raise over $100 million in funding. And earlier this year, we launched a $20 million DeFi-focused and to an extent NFT-focused now fund, where we've invested in over 30 companies, including the likes of Instadap, Sapper, Mintable, and Alchemy NFT. As you mentioned, we just closed applications, I think a couple of weeks ago for our next cohort. Which will have a Filecoin track. So this is the second time that we partner with Protocol Labs to run the Filecoin Frontier Accelerator. Super excited. So some great applications, and we're in the process of reviewing them in the next few weeks. I think then to your question around how investors are differentiating themselves, and especially in the past 12 or 16 months where we've been in a pretty strong bull market. I think that first of all, of course, you see a lot of capital available for projects, and I think as investors, you even see some notable investors that are really almost like fighting to actually be able to get into funding rounds. And so I think if you go back a few more years or even a decade or more, where capital and the network was all you needed as an investor to bring to the table. That's definitely not the case, and it definitely hasn't been the case over the past year. I think that investors really need to put forward, their value proposition beyond money and network to their portfolio companies, and those, whether you're meeting investors through an accelerator program or through other channels. I think that investors, have to get their hands dirty. They really need to help the startups with, developing the product, the strategy, scaling, growth, and even to continue to innovate, right? Particularly in Web3, where you see protocols, they launch a V1, then there's a V2, and so on and so forth. And I think investors need to be part of that development in one way or another. And I think investors really have to become venture builders, right? I mean, capital is not enough. And as a matter of fact, we started out as an accelerator, and then we launched a fund, but we decided to keep the accelerator because for us, it's a structured way for us to be able to help projects. And I think particularly when it comes to Web3, you need investors that are also knowledgeable about the space, right? So it's not just the Web2 topics like, the go-to-market, the business model, et cetera, but it's really around, designing the tokenomics, helping the projects, decide which decentralized governance model they go for, things like that.
I think you bring up some good points, Stefano. It's like the token sale is definitely, or the tokenomics in general is definitely new to a lot of traditional investors too. So maybe a question for Gabriel. Would love to get your perspective on what sort of the recommendations you give to startups when it comes to token sales.
Yeah,
and raising capital around that, right?
Yeah, 100%. I think the introduction of tokens is unique to Web3, and so it's definitely in terms of building like your startup, it's definitely an unfair competitive advantage compared to like those of us who built our companies in the Web2 era. But I see a lot of founders and a lot of teams rush to launch a token before they've actually built utility and or a community around that token, and I think that's a big miss. Shout out to Jesse Walden from Variant, formerly of A16Z, the GOAT. He wrote a piece a long time ago called Progressive Decentralization, which it has always been kind of like the framework, our mental model for how we think about companies and how we think about startups and how they should think about launching a token, which is you've got to find utility and function first. And you should really, really, really spend a lot of time focused on your community, especially the early stages of the community. Launching a token is just like launching a product or just like launching a company. It is that hard, and trying to do both before you've actually found utility or function or product market fit with your startup is a big miss. And what I see is a lot of investors who push startups to try to launch a token that has more to do about optionality and liquidity for the investor than it actually does it make sense for that particular project and that particular startup. So for startups who actually find utility and function, find product market fit, who find early use cases, and then can rally their community, it's a massive unfair competitive advantage as they go into market. Essentially, your community are both your users and your investors in some cases. In that case, which I think for a lot of startups is the holy grail. But I really would I always have founders step back and make sure that their token has real utility, has real use, has a real function, and it's not just about trying to create liquidity. And I think it's really, really important for founders to focus on that first and foremost.
Cool. Yeah, I know. I couldn't agree more with you. It's definitely a topic that's coming up a lot more often now as startups are investing and raising capital. It's definitely in a bull market. Some of the startups question like, hey, why should I join an accelerator program? So maybe Isaac would love to get your perspective on like, why should they, join an accelerator program? And when they choose a program, of course, we have 4 programs here at the table and we're going to create more. What should they be looking at, right, when they select one of the accelerators? What's your take on that?
Yeah, well, you have 4 terrific options right here. And I always, when I'm talking to founders about, hey, why should I come into your accelerator, let alone any accelerator? What I always say is, look, our value proposition boils down to we will dramatically increase your chances of success in your entrepreneurial pursuits. It's as simple as that. If you don't think that we're gonna 10x the probability of your succeeding, you shouldn't come, because you're going to give up a decent chunk of equity for, in most cases, not a ton of money, but what you're getting is an incredible basket of goodies that will, really help you to find success. And certainly, the Techstars numbers, and it sounds like my colleagues' numbers really play that out if you go to a high quality accelerator. So, to disaggregate that a bit, what should you be looking for? For sure, you want to find a place that will dramatically expand your network. It's in our tagline. We are the global network that helps entrepreneurs succeed, and I think everybody else here would agree with that. But you should be sure that by coming into an accelerator, you're going to just explode your network by orders of magnitude, and then oftentimes that's the most valuable thing that you'll get, whether it's access to investors or customers or prospective hires, ecosystem partners, mentors. You should, what we often do is get people who maybe have been toiling away in quiet, but are not necessarily natural networkers. All of a sudden they have access to people they never could have dreamed of. And so I think network's a big part of what you should be evaluating. Certainly closely tied to that is access to capital. If you're going to come into an accelerator, we should really be able to help you to raise money. And I think, everyone here is quite good at that, but you want to make sure that, look at our track records and see, have you been able to help the companies that have gone through the accelerator raise money? Certainly, again, the case of Techstars, we have a global network of 15,000 early stage investors, as well as the very strong personal networks that each MD like I have. And again, we have a great track record, but make sure you're going to actually get people who will help you raise capital. It's still on you. You're the founder. You ultimately have to, you have to bring your A game to do it, but we can help a lot on that front. Mentorship and expertise, I think that's just super, super critical. The mentorship is part of the core experience at Techstars. In fact, it matters so much that we take 2 of the first weeks in program doing mentor speed dating to help you find 3 to 5 lead mentors who are dedicated to spending time with you while you're in program. But also that kind of leads to the next point, like make sure that you're going to get long-term support from an accelerator. We do not say, okay, you've been through your 13 weeks and then, kick you out the door and say goodbye. We're here for the long haul. We're investors in your company. We have a ton of incentive to see you succeed. And again, we put a lot of effort, not just at the MD level, but at the Techstars global network level, to ensure that there is long-term support for our alums in the form of portfolio services, so that when you get on to the next thing, you're trying to build your team, you're trying to find you're moving into a new sector or whatever, you can usually find it throughout Techstars, not just, while you're in program, but for hopefully years after. And then I think the last thing is, everything always still kind of boils down to people. So spend time with the MDs and the program teams at the programs you're evaluating. Make sure you like them. I know I can't speak for the others, but I know at Techstars, most founders tell me, look, I experienced Techstars through the lens of the managing director. And so make sure that you like the MD, because you're going to be spending a lot of time with them. Make sure they're accessible. Make sure they actually have some value to impart and some wisdom to impart. And I think those are the high level things that I would evaluate. And there are plenty others, but those are maybe the most important in my mind.
Yeah, people do business with people, right? Yeah, whatever you sell, you're selling to human beings. Thanks, Isaac. So a week ago, I was actually talking to one of my friends who pitched an idea of a startup. He's doing his own startup and was pitching to a VC, and the response he got was like, love the idea, can you add crypto to that? I thought it was funny because then I can, so they, again, it was sort of an indicator that, there's a lot more momentum there too. And this is a traditional VC firm. I'm not going to bring up their name, but anyway, Stefano at LongHash Ventures, what are some of the use cases that you're seeing that are gaining the most traction with investors?
I was going to say, before I answer that question, you reminded me, I think this was in 2017, there was an iced tea company in New York, if I'm not mistaken, that put blockchain or crypto in their name. And their stock went up like, I don't know how much, but anyway, hopefully not a top signal. Look, I think in terms of winning cases, I think Gabriel said it earlier. If last year we had DeFi summer, this year we definitely have NFT summer, and I think we're right in the midst of it. I think obviously there's a lot of, there's some hype, there's a lot of noise, there's a lot of things to waddle through. We as an investor do come across a lot of NFT platforms, and I think I mentioned we have invested in some of the earlier ones. But I think also to link it to Gabriel's point is really around utility, and some of the winning NFT models going forward are around utility. We've seen it with with gaming. Of course, Axie Infinity is the most I would say famous or well-known example, but there's plenty others. We are seeing it with some of these like social DAOs and launching NFTs that have some utility linked to it. And even we're seeing it in the metaverse in the form of real estate, right? So metaversal real estate, if you will. I was hearing, I think yesterday, some fairly well-known media houses from Asia buying land in the metaverse, and then looking at launching NFTs that have utility around having events. I mean, we're basically now used to being on Zoom for these kind of events, and while I guess a lot of us are probably itching to meet up in person, but there will still be a form of this virtual in the future. And how can we actually make it a better experience by leveraging this kind of technology? So I think that's one emerging, let's call it a use case of NFTs that I think are starting to get some traction among investors. And I think the other one is, DeFi is still really big. And I think, we believe that we're just getting started, right? I think in the past 12 or 16 months, we saw, DeFi explode, right? And I think what we're starting to see now is that we're going beyond the simple, for lack of a better word, applications of TradFi coming into DeFi and starting to see the more sophisticated products coming in. So things like, derivatives, structured products, all these more sophisticated financial instruments starting to crop up as the DeFi version of it, which is very exciting, because I think for one is that, we see more momentum in this space, but then second, I also believe that this is one of the ways that we can, at some point in the future, start to link with the traditional financial system.
Yeah, I think, it's great to see all these new products. I see it on the lending side, as well. It's sort of like an iteration, right? You have the first program, high interest rates, high collateral requirements, and slowly on they start to implement what currently exists in the traditional financing world and starting to improve on it. So it's amazing to see all the innovation. You did mention something that I want to pick up on, is that the metaverse. I want Blake's view on that, because Outlier Ventures has been very vocal about, and very engaged on bringing the metaverse, right, in different verticals. And so what's your take on that, Blake? Where do you see Web3 storage startups and trends in this whole new metaverse evolve? And do we have Blake?
Yeah, so thank you for bringing up the metaverse operating system, probably organizationally one of our favorite things to talk about. And allow me to start by saying that at Outlier Ventures, we consider ourselves an evergreen investor. So looking into the future, we invest and support startups throughout the bull market and bear market. Actually, some of our best investments were made in the deep, dark freeze of the crypto winter. So in the context of the metaverse operating system and trends, we try to look beyond the web itself, up until the point when digital becomes undistinguished from real. In context of social media, you can also see it happening with gaming virtual worlds. So from the perspective of trends, that means the world will become more automated. And it's important how data is permissioned and controlled. It has to be user-centric. The difference would be the user is in control of the data, and they can give permissions and commoditize that asset. They can participate in the value that is generated from data. In combination with things like Filecoin and IPFS, access to other protocols that, when combined, enhance privacy, preserving computation, commodification of data in data marketplaces and institutional buyouts. You need data for AI and machine learning. And we have those complete projects in our portfolio and can accelerate startups working with decentralized cloud in its totality. Other aspects of the metaverse operating system thesis that this is touching, I believe, is financialization of data, the user centricity based on the principles of sovereignty, which is very close to my heart personally. And I truly believe, currently you need expensive hardware to access the metaverse. So those kind of technologies can increase performance and can offset some of the costs by renting out the capacity, and in turn turning cryptocurrencies and joining the virtual world economy. So I think you need data for AI and machine learning, as I mentioned, and I truly believe Filecoin and IPFS is the key to solve that and make the metaverse truly open, persistent, and interoperable.
Awesome. Yeah, thank you. Yeah. Any players, any Axie Infinity players on this panel? Because I just installed it like 2 weeks ago. I'm still trying to get my my right team together. No? Any recommendations on what combination I should go for? No? Anyway, put it in the chat. All right, well, we got one chat. We have one question from the audience. Kartik, can you maybe take that question and
Absolutely.
we'll wrap it up?
It was a really awesome discussion. I think this question, I'll rephrase the question, but it's been answered in parts, but maybe we'll kind of ask this more concretely. But do you have any frameworks around how should you think about forming a legal entity or launching your company if you have a token? And obviously this question is going to differ based on where you are, but for all of you here, any comments, advice, or frameworks that you like to talk about would be great.
Who wants to wade into this one?
It's a very hard question.
Yeah, it's. I'll take a shot at it, and then, but I'm sure, like Stefano, I know you guys have worked with a bunch of DeFi projects, Blake as well. I'm sure Isaac, you guys are working with them as well. I guess first and foremost, I'm not an attorney. I don't play one on TV or hackathons, etc. So this is not legal advice for anybody. But yeah, we've worked with a number of projects who have launched tokens, you know, PideOut, ILO.finance, Secured Finance, Powerloom, so many great companies. I would say, and I know our legal counsel would love this, first and foremost, get really good, competent counsel. Do not skirt this. Do not skirt this. You want to find counsel who is extremely competent in both Web3 and has done this before. So like, you know, don't get your brother-in-law because, you know, he practices law on the side. Don't do that whole thing. In terms of jurisdictions that you're looking for, it really depends on the nature of your project and the nature of your token. What we have seen historically is a number of different structures and setups. You know, we've seen a Delaware C Corp parent and then a child that sits in BVI or Cayman Islands, something like that, something with friendly jurisdictions. This is not legal advice. Here's what I would tell you. Like, if you have even a single customer, even a user who's using a VPN, who's based in the States, you're not going to skirt the SEC. So, you know, don't even think about it. So we've seen a number of jurisdictions that are friendly to DeFi, that are friendly to tokens. You know, I named a couple. Singapore, shout out Singapore, you know, has great jurisdictions for token and token-based projects. But I cannot stress this enough. Please, please, please go get really good, competent counsel if you are thinking about launching a token. It will more than pay for itself in spades in saving you a whole bunch of headaches and potentially ending up in an orange jumpsuit. So yeah.
Yeah, I will just add to that. And I will also give the disclaimer that I am also not a lawyer, and this is definitely not legal advice, but I think the jurisdictions are important. And so we are quite lucky that we're based in Singapore. And I mean, generally when you're at the really early stage, before you've launched the token, before you've decentralized into a DAO, of course, you know, a lot of our accelerators would have incorporated in Singapore. It's super easy, and it's like also super cheap and very fast. So that's an option, and it's I think globally it's one of the most crypto-friendly technocratic jurisdictions. Yeah, so that's usually a starting point. But I echo what Gabriel said, just get a really good lawyer. There's not that many that understand crypto, but you know, we can introduce, I'm sure all the other guys here can also introduce it depending where you are, and speaking to a good lawyer on this is critical.
Thank you. It sounds like that the legal environment could use some innovation there as well. And, you know, Maybe we should do a session around that at some point. Anyway, great conversation. I really appreciate everyone's active participation, and thank you again. We'll hope to do more of these. The next session, I want to thank all of you, Isaac, Gabriel, Stefano, and Blake, because I know for some of you it's really late out there. So I appreciate to do that on a Friday afternoon or Friday evening or Friday night. And with that, we're going to move on to the next topic. Kartik, I give it back to you. Thanks, everyone. Have a good rest of HackFS.
Thanks, everybody.
Thank you.
On for moderating an amazing chat. So next up, we have our